What made you want to start your career in banking, and why Morgan Stanley's Tech Group?
I had a bit of a familiarity with investment banking from my brother. I remember hearing from him that he was starting this fancy job and he was taking these black cars, to and from work, and he had a meal allowance, etc. So I just remember investment banking being really glorified.
Today's guest is Eugene Berson, Head of Sales Operations at Miro, the collaborative whiteboarding tool trusted by virtually every Fortune 100 company. A lot of people might look at what you did and say like, oh, you left Morgan Stanley Tech, which is very established, one of the top tech groups on the street, to go to this new bank that was also focused on tech, but it's like just starting out, and that can be viewed as risky, right? So like, how did you evaluate that decision, and what ultimately drove you to make that jump?
That was definitely something that I considered a pretty risky move at the time, because I didn't necessarily have a ton of options at that point in time. And some of it was maybe a little bit of like luck and intuition.
What were some of the biggest differences between working at a bulge bracket bank like a Morgan Stanley versus working at, say, like a code advisor, maybe more of a boutique? What were some of the pros and cons, I guess, of those two things in your opinion?
It's a great question. At Morgan Stanley,
if you could go back and give your 18-year-old or 20-year-old version, Eugene, just one piece of advice, knowing what you know now, because I'm sure you've learned so many things.
Yeah,
Welcome to another episode of Wall Street Diaries, a podcast about extraordinary individuals who launch their careers on Wall Street and use that experience as a springboard to build world-class careers. We bring you the stories of people who turned that foundation into something remarkable. Today's guest is Eugene Berson, Head of Sales Operations at Miro, the collaborative whiteboarding tool trusted by virtually every Fortune 100 company. And before helping scale software unicorns like Miro, Asana, Slack, and SurveyMonkey to hundreds of millions, and in some cases, billions in revenue, Eugene launched his career at Morgan Stanley's technology investment banking group and later joined Code Advisors, where he worked on over $1 billion in M&A for high-growth pre-IPO companies in the internet and digital media sectors. Since then, he's made a seamless transition from banking to operating roles, leading revenue strategy, go-to-market execution, and sales operations at some of the most iconic software companies in the world. During Eugene's time at Slack, the company scaled from a fast-growing startup into an enterprise powerhouse, eventually culminating in a $27.7 billion acquisition by Salesforce in 2021, one of the largest software deals in history. So if you've ever wondered how investment banking can set you up for success in the tech world, or what it's really like to help build some of the most powerful sales engines in Silicon Valley, Eugene's story is one you won't want to miss. With that said, welcome to the show, my friend. It has been a long time since we've caught up, and I'm grateful that you agreed to take time out of your busy schedule today to talk to us.
Absolutely. Sam, great to see you. It's been a minute since we connected with our banking background together, but yeah, happy to be here.
Yeah, absolutely. And, just to dive right into the questions, because I know, you're obviously super busy. What made you want to start your career in banking, and why Morgan Stanley's Tech Group, I guess?
Yeah, gosh, it's been a minute since I've thought about this, but I went to a college that wasn't necessarily a feeder school for investment banking, but it was a good school, and it had a great alumni network.
Yeah.
The school is called Williams, a small liberal arts place, like 2,000 students. And I had a bit of a familiarity with investment banking from my brother. He and I have a 12-year age gap. He's older, but he did start his career in investment banking. And so I remember he was 18, I guess, or he was probably 21. I was 9 years old or whatever. I remember hearing from him that he was starting this fancy job and he was taking these black cars, to and from work, and he had a meal allowance, etc. So I just remember investment banking being really glorified in a very shallow way, because I was not even 10 years old, and hearing that from him, that kind of stuck with me. And then when I was a junior, I guess I was looking for an internship, and I was reaching out to the alumni community at Williams. It's kind of like a really powerful asset of that school, because it is so small, and alumni are rather responsive. And so I remember reaching out to the Morgan Stanley Tech Group, not even really knowing if it's investment banking or not. It could have been IT for all I knew, because like the business title of the individual was a little bit ambiguous. But I reached out to somebody that, Sam, you will likely remember, as Nick Osborne. And he is, Williams grad and really well respected within the Morgan Stanley Tech Group. I remember he said he replied. We arranged a meeting, and this was actually in the summer of my sophomore year, so way before I think traditional recruiting for these internships starts.
Yeah.
And so I show up. He asked me some questions. I meet a few other people in the group, in the tech group, and I was studying economics at the time. Like they asked me some questions on like tariffs or something that might be relevant in today's climate. But I remember I was very relevant to what I was studying. So it was easy for me to answer, but it was not there was zero finance questions because I had zero background in it. You don't study that in liberal arts.
Yeah.
And so, long story short, I secured the internship, that following summer of my junior year, I did the 10-week program or however long it is. And, had a good experience, developed some good relationships, saw the high impact of the work. And it was 2008. And obviously, like having a job lined up was really valuable at the time. I accepted the offer, I joined, and I did the 2 years, and then I signed up for 2 more as an associate at another firm, right?
Yeah.
I did 2 years at Morgan Stanley, did 2 years with Code Advisors. We can talk more about that in a bit. But yeah, that was kind of my entry into the space really through my brother and through the alumni community of my college.
Yeah. So are you saying that Morgan Stanley was, I don't know if it was the only bank or just one of the very few banks that you talked to, and it just you happened to encounter Nick, and that's how you ended up there? Or did you go through like the full recruiting process like most people were there, applying to all the banks and trying to network everywhere? Like, what was your experience like, I guess?
I essentially was able to bypass that process. And the reason for that is because I reached out to Nick my sophomore summer. I actually remember this quite well. When I went to the Morgan Stanley offices, it was like August of that sophomore summer. And I had a flight to catch like within 2 or 3 days because I was going to study abroad in Spain, Barcelona. And so I was like top of the world, like, middle of my college career, about to set across the ocean to have this amazing study abroad experience. I just did some internship that was not in banking, but was not nothing. And it was kind of like I had no expectations. Either something comes of this or maybe it doesn't, and there will be plenty of time to recruit. But I was excited about it, obviously, because I knew I was going to be away for 4 months studying abroad, and I really didn't want to kind of like have to worry about recruiting while being in a different time zone, etc. So because it kind of worked out, I was really fortunate and kind of was able to fast track the process. I did reach out to some other alumni at other banks, and I think Nick was just the most responsive one. I maybe had one other conversation. So definitely there was a volume aspect to it. It wasn't kind of like I shot a dart and it somehow struck the bullseye. But one of those darts did, as I mentioned.
Yeah, that's crazy. What you said just reminded me of how back in our days, because we graduated the same year, obviously, you starting your networking process in the summer after sophomore year was considered early, right? So like you basically got in before they even kicked off the process. Whereas like now the recruiting process for the junior summer internship starts. I don't know if you know this, obviously I live this every day, but it's moved up. It continues to move up earlier every year. And so now we're at the point where applications open during like the first semester of sophomore year. So to do what you did, you would basically probably have to reach out as like a freshman or something, which is just crazy because most freshmen, they just got to college. They don't even know what they want to do, right? And so I feel like what we had to do back then was like a lot more reasonable, if anything. And Nick, I remember him. I worked on a deal with him, and obviously, I guess by the time you reached out to him, he was already really senior. He was like a managing director, and I think that also just goes to show like the power of effective networking. Like if you can get in touch with the right alum from your school who happens to be very influential at the place that they're at, anything is possible, right? And I think Nick also later, I'm not sure, this might have been after you and I both left MS, but he left and started his own firm, right? DBO, which is also like a tech boutique, pretty similar to Code Advisors, which you went to. And that kind of was going to be my next question, which is, if I remember correctly, I think when you left MS to go to Code, they were like just starting out, if I recall. Like you were one of their first employees, if I'm not mistaken, right?
That's right.
One question that I wanted to ask is when you were making that decision, like how did you think about that decision? Because I always tell my students that, hey, like at some point in your career, you're gonna have to take some calculated risks, right? Like if you look at like all the really successful people that you admire or look up to, like at some point they had to take some risks too. And so like risk in and of itself is not like necessarily a bad thing. It's like how you evaluate those opportunities, and like any risk comes with like potential reward, right? And so a lot of people might look at what you did and say like, oh, you left Morgan Stanley Tech, which is very established, one of the top tech groups on the street, to go to this new bank that was also focused on tech, but it's like just starting out, and that can be viewed as risky, right? So like, how did you evaluate that decision, and what ultimately drove you to make that jump, I guess?
Yeah. So I'm not particularly risk loving by nature, but that was definitely something that I considered a pretty risky move at the time. Some of it was just the desire to kind of like have certainty, because I didn't necessarily have a ton of options at that point in time. And some of it was maybe a little bit of like luck and intuition, I wasn't, necessarily swimming in alternatives at that particular juncture. And so I think to kind of like backtrack from that a little bit, there was various recruiting cycles that started very quickly when we started our 2-year journey, and they're probably continuing to get pulled forward for your comment earlier. But I didn't have a background in finance. I didn't have a background in kind of like vocational work, if you will. So our group, as you called out, is one of the best on Wall Street, and it attracted some of the best talent. What do you categorize as best talent, I think, starts to get really diverse as you progress through your career. But you're early in your career, best talent is very quantifiable. It's, are you good at Excel? Can you do a 3-statement model? Can you crank out slides, et cetera, et cetera. And so I did do the internship. So, that was a crash course in all those things. Yeah. But compared to, Sam, some of our peers who went to, UPenn or, other fantastic Ivy League schools where they were able to take effectively like these Wall Street prep courses, I didn't really have that background. And when the private equity wave of recruiting hit, I didn't really know how to participate, and I took some conversations, but they didn't really go anywhere. And so that wave kind of came and went, and I didn't necessarily have even conviction if that was something that was for me. I was just like participating because I saw everybody else participating. And so then that wave kind of came to a close, and now all of a sudden, probably for the first time in my life, you're like, well, there are all these possibilities available to you. Which path do you take? And I spoke to some big corporates. I remember I took an interview with like Salesforce, which in retrospect didn't work out, but that could have been really interesting because this was back in like 2009. And I spoke with like some venture capital firms who didn't necessarily have like programs, but it was like opportunistic conversations. And then Paul Chamberlain, actually, if you recall, he was the one of the most senior MDs, if not like a chairman of our group. Paul Chamberlain introduced me to Quincy Smith, who is the founder of Code. And they courted me like quite aggressively because they were a startup and they needed to fill out their ranks. And so I remember Quincy, who's the founder of Code Advisors, he introduced me to some folks who are like legends in Silicon Valley. And I had no idea at the time. Zero idea. I was meeting with these people who were like trying to convince me to work for Quincy. And I didn't even know what was happening to me. One of those people in particular is this guy, Peter Curry, legend in Silicon Valley. He was a CFO at Netscape. He was a board member at Twitter. Okay. And he is a big investor through his family office. Okay. And I think he was an advisor to like Index Ventures, one of the more successful venture capital firms. And so I remember like meeting with Peter and asking him about Quincy, just like completely oblivious the stature of the person that I'm talking to. And there was a couple other examples like that. And so, somehow my decision-making led me to accept the offer between like Paul Chamberlain vouching for this guy Quincy, between some of these conversations with people who were apparently incredible, but I had no idea. But they were convincing in their own right. I took the leap, and it was pretty awesome. Because this was a startup bank, and because I had this like training ground of Morgan Stanley, I was able to really shine and bring my best practices, et cetera, to them and kind of build their foundations. And on top of that, what was really unique about Code Advisors is they found a niche that was unaddressed by bulge bracket banks. And the niche was acting as a capital advisor, or like an advisor for raising capital for these pre-IPO businesses. And there was a big appetite from like the Fidelities of the world, from like Masons of the world, like T. Rowe Prices of the world. There was an appetite for them to diversify some of their public portfolios with like late stage privates that were, had a line of sight into a public offering.
Yeah.
And so it was like really right place, right time for Code Advisors. And I just got, you mentioned earlier in the intro, $1 billion of transaction value. It was intense. It was awesome. And it was like raw, because you're not working with, oftentimes I wasn't working with a CFO. I was working with like the founder, who maybe had like maybe a VP of finance at best. And so I was really able to bring a lot of value and get these transactions done.
That's awesome, man. I mean, just a couple of thoughts on everything you just said. So much to unpack there, but whether it's the private equity on-cycle recruiting process, because I went through that as well, and similar to you, I gotta say, I just didn't know much about it. I didn't know how everything worked. I didn't know the timeline. It kind of just happened, and I was caught totally off guard. I didn't know how important the headhunter conversations were. I thought they were my friends and just trying to help me, which like in hindsight is like so naive, right? And I just wasn't ready for that process. And I had no one in my family or around me who could even tell me that kind of stuff. And even like your story about meeting Quincy or not knowing like who he was introducing to you and those things, like I can relate to so much of that, which is just like when you're younger, there's just a lot of times you don't even know what's going on. And you're just trying to like make the best decisions you can about your career. And sometimes some of it is like you just happen to be in the right place at the right time, the right opportunity, but you still have to like step into it and like take that opportunity when it's presented to you, right? And so that's awesome. But like, and then you kind of started talking about this a little bit, but I was going to ask you, like, I think a lot of our people in our audience are probably wondering, like, what were some of the biggest differences between working at a bulge bracket bank like a Morgan Stanley versus working at, say, like a Code Advisor, maybe more of a boutique, but they like are highly specialized in one specific vertical, one specific area. Like I could think of like Code, or even like Code eventually was acquired by Rain, right? Similar financial technology partners. Like there's a lot of these firms that are smaller, but they're really, really good at just what they do. What were some of the pros and cons, I guess, of those two things in your opinion?
It's a great question. And at Morgan Stanley, there's a lot of layers, I guess. Let's start there, right? Yeah. At a traditional bulge bracket bank, there's a lot of layers, from you as an analyst to the associate to the VP, and so forth. At Code Advisors, there were no layers. I was working, directly with Quincy, or he had two other partners or those individuals. So it was like 2-person deal teams, and that was great, right? I would also say just the camaraderie was just so much better. It was not a meat grinder. It was not a factory. Like I was going to the client meetings, all of them. I could ask for help and not be judged. Or oftentimes I was able to educate around best practices and this versus that, without kind of like talking to somebody who was like been there, done that. And not that Quincy hadn't been there and done that, but he is a relationship banker. He is a visionary and thought partner to his clients, and he really leaned and trusted me to get the numbers right and take his vision and put it on a slide. And so it just like allowed me creative freedom. And I think the value exchange was very tangible. Whereas like sometimes, you've got the analyst and the associate, and like, do you really need both of those people there? There maybe is like an expectation of like, oh, I got to prove that I'm adding value. So, the associate can add, unnecessary complexity, et cetera. So like all of that was just stripped away, and it was about delivering value for our clients.
Yeah.
And so, yeah, it was really fun.
Yeah, I was gonna say, like, because I feel like, especially when you're younger, a lot of the criteria that you might use to define whether what success means or whether a job is a good opportunity or not, a lot of times it's just like, oh, the brand of the place, like, is it prestigious? Like, I want to work for Goldman Sachs or I want to work for Morgan Stanley. That does matter. I'm not saying that doesn't matter, but I think it's one of many factors to think about, right? Obviously, compensation is an important one, but also I think, especially early on in your career, a lot of it also is around what your role and responsibility is going to be. How much are you going to learn, and who are you going to have exposure to? Like being able to go to every single client meeting, for example, like that would not happen at a bulge bracket bank. Like a lot of times you make the books and then your boss takes the books and goes to the meeting without you, and then you stay back and make more books, right? And
Yeah.
so
Yeah.
you're not like the one that's actually like rubbing shoulders with the CEOs and CFOs or like the clients that you're supposedly advising, right? So I think all of that has to be taken into consideration. And there's not like a right or wrong answer. I'm not saying like bulge bracket is better or boutique is better or whatever. It's just like when you're thinking about these career decisions as a young person, I think you have to think about it a bit more holistically and almost like figure out what's more important to you. And that answer might be different for every single person, right?
Yeah. One thing I'd add there is like real skill into taking this like really intimate detail of financial modeling and the summaries of it and
Yeah.
educating people who are not living and breathing it every day. And
Yeah.
in a traditional analyst role, like you're doing zero of it. And when you're talking with your associate or anybody on the deal team internally, the level of depth that you're at is going to be really deep, and that's great sometimes, but it has diminishing returns. And so, what I recall really enjoying at Code is kind of not only doing the inner workings of it, but kind of how do you tell? There's a story there's this quote that my old boss used to say, like, I wish I wrote a shorter letter, but I ran out of time, and that's a Mark Twain quote. And so, like, how do you take the time? How can you be afforded the time to not only do the deep, heavy work, but also like to simplify away the complexity, or like make it so that your presentation is an onion, and you start at the appropriate outside layers, and go inward if and when appropriate. That's a skill.
Yeah.
That's storytelling, and I think your fundamentals are only they will reach a plateau very quickly.
Yeah, for sure. No, that's a great point. You end up doing, I think, almost 5 years combined in banking between Morgan Stanley and Code, and then you leave to go do corp dev at SurveyMonkey. Corporate development, I think, is pretty well understood as a typical IB exit op. But then after that, you left SurveyMonkey to join Slack to help them build out the sales operations team. So for people who have never worked in sales operations, because I feel like that's like, it's not something you hear about as much. Um, what exactly does sales ops do? And what kind of person or what kind of makeup does someone need to have to be successful in that type of role? Because I know you built like the entire sales ops team at Slack from, I don't know if it was like from just you to eventually being like 30 people or something, right? And you guys were supporting, was like a 1,500 person sales org. So it was a huge team that obviously drove a ton of revenue for Slack. So like, I'm sure you've done a bunch of recruiting and hiring and interviewing and just knowing like, and also being able to do the pattern recognition on like, who are some of your best hires, who are the not so good hires, and what do they have in common? So can you kind of speak on that a little bit?
Yeah, for sure. Well, first of all, just like finding my way to sales operations was very much a happy coincidence. Really, what I was solving for is like working for an iconic company. And when I was at SurveyMonkey, we were a beta customer for Slack. So I was using Slack early, before it was a household name. I saw kind of firsthand that it was fun. It helped me with productivity. It accelerated my efficiency. Success breeds success, and what I mean by that is I went to work for SurveyMonkey because Dave Goldberg was he has passed away since, unfortunately, but Dave was a really renowned leader, And I didn't have a passion for surveys. It wasn't a prerequisite to join the company. But I remember when I was at Code and Quincy and I would have very transparent conversations of like, hey, eventually I want to go in-house. And actually just like to connect the dots with the earlier part of the conversation, I felt like at Morgan Stanley, even though everybody knew you were recruiting, you were like not allowed to talk about it almost. At Code Advisors, I was able to openly talk about my career aspirations and ambitions. And, because I won the trust and I added value to the organization, they were very much like willing to support me. And so Quincy was able to open doors, make connections, and did so in a very gracious way. And so, so I went to work for Dave Goldberg, really. I went to work for SurveyMonkey, but I really went to work for Dave Goldberg. That was my thesis.
Was married to Sheryl Sandberg. Is that the guy?
Exactly.
Got it. Okay, cool. Sorry, continue. I didn't mean to cut you off.
Yeah. So, but that might be kind of like the common thread earlier in my career. Like, was Code Advisors going to be successful? Is it going to be the right place for me? I don't know. Paul Chamberlain, who is a banker that I work with and respect, vouches for Quincy, and there's some other stuff. Let's do it. Or, Quincy vouches for Dave Goldberg as an exceptional, operator and CEO. I'm going to go work for Dave. And then, I didn't know anybody at Slack, but, Slack is an iconic product that I firsthand believe in. And that was probably like a pivot a little bit in my thinking away from like solving for the people and less and like more solving for the product. It was kind of like that mentality. I think actually it was Sheryl Sandberg that might have said it, like, join the rocket ship. Don't worry about your seat in the rocket ship. So
yeah,
I joined Slack and I was like in a generalist BizOps role, kind of like project-based initiatives. And then very shortly into my time there, our CEO at Slack, Stuart Butterfield, he says, we're going to go after the enterprise segments. We're going to build out a proper sales organization. We're going to graduate from, being kind of a product-led growth business, self-service business. We're going to go for those larger transaction sizes, which require a human-led selling effort. Yeah. And so I raised my hand and I said, I want to participate in that because I, showed up and had energy and had just like intellectual horsepower. I was afforded the opportunity to do that. And the way it worked out is Stuart hired a head of sales. His name was Bob Fratty. Bob brought in a lieutenant of his from Salesforce to lead go-to-market strategy operations. And that person needed to build a team. And so I was essentially like his first hire, give or take. And I did like sales commissions at first. And I don't know if anybody in this podcast knows about sales commissions. There's actually a lot of depth to it if you do it right. Yeah. But like at the fundamental layer, it's like a very simple spreadsheet that any banker could do with their eyes closed. So in some ways, I remember really struggling. I'm at this amazing company, Slack. It's clearly going places, but I'm doing Excel spreadsheets that are quote unquote below me because I'm a banker by background. But I crushed it. And then I had the next thing and the next thing and the next thing. And next thing, as you said earlier, I was able to build out a pretty large team. I was able to work on my leadership skills and my people management skills and my recruiting skills. And that was really the turning point for me to really kind of like grow into the opportunity that was in front of me that was in Slack.
Yeah. That was an awesome story, man. And that quote by Sheryl Sandberg is so on point. Because I've been at a couple tech startups similarly, like Square and GitHub, rocket ships, like doesn't really matter what your seat is, just like get on, right? And honestly, these companies, they're going to be rocket ships with or without us, right? Obviously you're still contributing to their success once you're there, but it's like you want to, if you're going to bet your career and invest all of your time and energy for, I guess you ended up being there for like 6 years, for example, that's a very long time. I also have friends that worked 6 years at a startup that ended up being worth nothing, right? Yeah. And that is like, from speaking to them, like one of the most demoralizing things ever, right? I've worked at a tech startup that ended up being worth nothing, but luckily I only spent a little over a year there, so it wasn't as bad, right? But nonetheless, I think to your point on sales commission, it does seem, even though at the time it seems like it's beneath you or whatever, in reality, like anyone that has worked as a sales team or built a sales team or managed a sales team knows that having the right sales commission structure in place is like probably one of the, if not the most important things you could do in setting your sales team up for success, because and I have my own sales team now. I mean, obviously it's very different from like an enterprise level sales team for a company like Slack. But like what I've learned is that salespeople will behave how you want them to behave, based on the way you set your commission plan, right? Like they will just act in whatever way is going to get them paid the most. And so like you actually have a lot of control over like how you want them to act, right? But like so much thought has to go into like how you build that plan to make sure that also you're not accidentally incentivizing the wrong behavior, because salespeople will also like try to game the system and whatever. And sometimes if you don't set the right plan, they do like things that were not what you intended for them to do. Right. And so there's just so much strategic thought that has to go into that. I'm like nowhere as deep into sales ops as you were, but like I had to do, similar type stuff when I was at GitHub. And there's actually, like you said, a lot of depth to the subject matter, I feel like. So then obviously when you join Slack though, I think you joined like right before they raised like a $200 million round or something, right? At least if I looked at your LinkedIn, I think that's the case. And so at the time when you joined, I think their $200 million round was like $3.8 billion post money or something. And then you were there for like 6+ years. Like it was just like an eternity in startup land, because most people stay probably no more than 4 years, I would say, sometimes less. And then obviously like you were there when the acquisition to Salesforce happened, which in a way I guess kind of is full circle, because you talked earlier about potentially having you could have worked for Salesforce. And then so like I mentioned at the beginning of the episode, like that was what $28 billion or whatever, is one of the largest software exits in history. I don't know if it still is, but at least at the time. And so to put 6 years into helping build a business, and then to see that come to like culminate in this type of exit, like I feel like not everyone has experienced that before. What was that experience like? And also like what was going through your mind the day that deal closed?
Yeah, good question. I mean, Slack was an incredible experience. And if I talk to all my peers and colleagues, that many of whom have moved on since then, I think everybody is kind of craving to recreate that where in their new place. And the further you get away from it, like in time, the more you realize how special it was. And there's definitely elements of it that I took for granted. I think many of my peers took for granted because you just don't know any better. Business cycles last decades, not years. And right now we're in a certain business cycle where SaaS is challenging, but we were in an upswing when I was there, and so Slack was kind of like at the right place at the right time with this first mover advantage as it relates to the product category, kind of like this text-based, chat-based collaboration. And the PLG model was relatively new as well, and so we were able to like capture all this organic demand. And then you had the pandemic, and businesses needing to be hybrid or remote, and kind of looking to recreate that office water cooler talk. There was so many things that added up, or like because the company was doing well and was grabbing headlines, we were able to attract the top talent. And so you put all these things together, it makes for an incredible experience. The moment that stands out to me, because there was capital raises, there was a direct public offering, and there was the acquisition. It's really the DPO day, the direct public listing. That was a very special day. We had everybody at headquarters kind of getting together. We used to have these, like we called them gather hours. They were kind of like happy hours, but we call them gather hours because there was no expectation to drink. So it kind of like speaks to the Slack culture being really inclusive, and it shows up in little ways that really do add up. But we had this like a special gather hour to celebrate the listing, and there was just incredible energy in the air. I remember like I bought a champagne bottle for everybody on my team, and it was just like very, very special. And then the next day, or maybe even in the afternoon, it was like back to business. I do remember that being an emphasis as well, because we, continued to have loose ends that we have to tie out, or like the next thing that we're going to do. And people wanted to bring their best selves to work. They were able to see the impact of their work, and the DPO was one culmination of it. But it was just like being at Slack was a steady diet of challenge to success and challenge to success with that particular thing. And so you daisy chain it all together, you can get some, really meaningful results. And yeah, that was an incredible ride. I will say, I was kind of like mid-career, mid-level seniority at that time. I don't envy, the executive team, because with great success comes great responsibility. The choice to be acquired, surely a humbling experience for a breakout CEO. And there was always the intention to stay independent, but with a variety of factors, like it was such a astute move to do the acquisition, given the valuation multiple that it received at that point in time and kind of like where the macro stood. So yeah, Slack's story during my time there was really like a series of very fortunate events. And I just feel so grateful for that experience.
That's amazing, man. And yeah, like I think what stands out to me about what you just said is, you guys had this like huge milestone, so to speak, along the way. And then of course you celebrate the wins, but then once you've done that, it's like, okay, like our work is not done, back to business. And then now you're working towards like, you just continue to work on building the business. And that culture is probably part of what enabled you guys to hit that milestone in the first place, because like that wasn't like the end goal wasn't just to go public. It's like that's just a something that happened as a byproduct, how good of a business you guys were able to build along the way, right? So that's an amazing story. I guess I know we only have a few minutes left. One last question that I did want to ask you before we have to go is I always like to ask everyone I interview, if you could go back and give your 18-year-old or 20-year-old version, Eugene, just one piece of advice, knowing what you know now, because I'm sure you've learned so many things over the last, 18 years or something that you've been working. What would that piece of advice be, I guess, to your younger self?
Yeah. I mean, there's so much there. If only time travel, was possible. There's so many things that I wish I would have done differently. So I'm going to, share something that's stands out, like as you asked the question, but I don't know if that's like the most important one. But I would say I had an ego, and I thought I was, really smart, and I would sometimes like dismiss, for example, like certain functions within an organization. Oh, this is like HR, or this is, I don't know, marketing, or pick whatever. I kind of always had a self-belief that helped me in many ways. But the shadow side of it, looking back, is I think my self-belief felt that like I was always doing the most important thing in the organization. And it really, any company is a team, and every cog in that company is critical, and you can learn from anybody.
Yeah.
And so like, I think the sales commissions thing that we talked about is maybe a good example. As I said, like, I remember being really torn on, like, I'm at Slack. This is an amazing company. I'm doing sales commissions, or I'm signing up to do sales commissions. This is like low value work, right? But as you develop domain expertise within it, you understand that it's much bigger than meets the eye. And, if you have a growth mindset and you're curious, you can pull the thread on how it connects to the bigger whole. And these light bulb moments just start to accumulate. And so I would say, like, people that go into banking probably are all type A and are all really successful in their kind of like academic route. And it can create a little bit of that ego. And again, it can be powerful. It can allow you to show up with confidence and do really great things, but allow yourself the open-mindedness to learn from literally everybody, regardless of their title, their level of seniority. Learn how to build relationships. Even if you don't learn anything from them explicitly that you can take away and write down, how do you connect with that individual, regardless of the power dynamics? So I would say that's like the thing that comes to mind for me.
That's so good, man. I mean, I have a thought on that, and I know you got to run, but it's NBA playoffs right now, so I've been watching all the Warrior games, and they just had like a couple wins where the role players on the team, like not Steph or Jimmy, but like Pods or Buddy Hield or whatever, who were like instrumental in the team winning the game. And I feel like the analogy here is like a lot of people that make it into banking after college, when they were in high school or when they were playing AAU ball, they were like the star player on the team. That's why they made it into the NBA in the first place. And then when they get to the NBA, there's only like 400 players in the entire league, but on every team, there's like one or maybe two superstars. And then everyone else is pretty much considered a role player, and you have like a specific role on the team. Like you're the shooter guy, you're the rebounder, you're the whatever, and you can become the best at whatever your role is. Like you can become like the star of whatever that role is, without necessarily having to be like not everyone can always be like Steph Curry or LeBron James, or there's only one of those guys, and that's okay. You're still one of the 400 guys in the world that play in like the best league in the entire planet, right? And you can still help your team win a championship, and there's nothing wrong with that. And so I think, yeah, man, just that piece of advice, that's a pretty unique one, actually. I haven't heard that one before, and I think it's such good advice. And I definitely had some of those same feelings myself coming out from banking, thinking I'm like, too good for this, too good for that, or whatever. And then you just realize as you get older, like that's kind of just like, you have to go through like a little bit of an immature phase before you kind of learn these things, right? So thank you so much for sharing that. I think that was amazing. You're late for your next meeting, so I'm going to let you go, but this was it was awesome catching up with you, and also hearing about just your career and some of the decisions you made. I wish we had more time, but I'm super grateful that you even carved out this amount of time to share your story with us. And yeah, man, it's great to catch up, and hopefully we can do it again soon.
Yeah, thanks, Sam. This was really fun for me to kind of reflect, and I think in general, like in our fast-paced world, like we probably don't take enough time to reflect. So thank you for giving me this opportunity to do that. Congrats on what you're doing. Super inspired by kind of like your entrepreneurship journey, and yeah, wish you all the best, and look forward to connecting again soon.
Thanks, man. I appreciate that. All right, we'll talk soon. All right, see you later.
Bye.
Bye.